Thank you, Madam Chair, and good morning. I'm happy to have you all before us today, and thank you for your testimony. My question starts with Chairwoman McWilliams, and I want to ask you about a type of bank regulated by the states and by the FDIC, and those are industrial loan companies known as industrial loan banks in my state of Utah. For decades, the FDIC quarterly call reports document ILCs are among the safest and soundest financial institutions in the country, yet some suggest that ILCs are underregulated and that the FDIC does not have the authority to provide ILCs or their parent companies with the necessary supervision to ensure that they operate in a safe and a sound manner. So, Chairwoman McWilliams, does the FDIC have the authority it needs to properly regulate ILCs, and can you describe for us what powers you have to examine an ILC and take action against it or its parent company, if necessary?
Yes. Yeah. Thank you for that question. The short answer is yes, we have the appropriate authorities to appropriately examine and supervise ILCs. We also work with the state supervisors. In fact, I have met with a great gentleman from your state who is a superintendent, and we feel that we're appropriately positioned to be able to enforce the existing laws and regulate ILCs.
And would you approve an ILC's application for deposit insurance if you believed it would put the deposit insurance fund or the financial system at risk?
Well, I don't engage in hypothetical on that one. It's absolutely no.
Okay. I want to move to a different topic then. I want to ask a few questions regarding the Community Reinvestment Act and CRA reform for whoever on the panel may feel inclined to respond. As the Fed, the OCC, and FDIC work on proposing updates to CRA regulations, I hope that you can all preserve the spirit and intent of the CRA to benefit low and middle income communities and individuals while also updating the CRA for a 21st century financial system. So a couple of points that I hope to see in CRA reform and then some questions. As you consider CRA reform, I hope that you all look for ways to push financial institutions to innovate, to try new data-driven projects while giving those institutions the certainty that they need that innovation will be permitted under the CRA for credit. And I hope that we can reform the CRA to be more outcomes-driven rather than input-driven. And I hope that we don't lose the community-driven purpose of the statute. So, as I said, a couple of questions. The advancement of technology is widely cited as one of the drivers of CRA reform. How can regulators balance widespread adoption of electronic and mobile banking with the CRA's statutes focus on local communities? And how should branches, banks, or bank-like banks be addressed?
I'd be happy to address that. Thank you very much for that question, and I appreciate your insight to this and would love to follow up and have some dialogue with you on this. As we look at the branchless institutions, and a lot of those are located in Utah, as we've talked to them about what their thoughts were, a lot of times they say we want to be able to serve more where our customers are. So giving them the flexibility not only to serve at their headquarters or where their charter is, but looking through their customer base and being able to serve those communities across America. And that's one of the goals that we're trying to accomplish.
Thank you. I've spoken to many banks about the Community Reinvestment Act, traditional banks, banks that do fintech partnerships, and many of Utah's industrial banks. And one of the things they tell me is that it takes also too long to receive feedback from regulators after a CRA examination has taken place. Does it make sense to get word back to banks sooner so they can make needed adjustments and so they can better focus on serving the credit needs of their communities? And will CRA reform efforts touch on this point?
I absolutely 100% agree with you. I think across all three regulators, we can do a better job of that. And partly it's the subjective and ambiguous way that it's done today. And if we can bring a more objective way that it's measured, I think we can dramatically accelerate that feedback, but also put institutions in a position where they know what the criteria is, and they can be managing that so they know that they are satisfactory or outstanding before we show up.
Thank you. I just want to, reiterate my points then. As we move to adapt a CRA for 21st century technology, I hope that we can still maintain a focus on those communities that are impacted and those communities where those banks may be physically located, because even if they're serving clients in a mobile and online fashion, they are located in a particular jurisdiction. But also as we work to our understanding and opportunities to benefit those communities that CRA is intended to benefit, or those populations that it's intended to benefit, that we might find ways to encourage better innovation and more data-driven ways rather than the safe ways that have just been kind of cookie cutter in the past. And with that, I yield back.